Welcome back, and joining me for a closer look at what's played out on the market scene today is Ashburton's Patrice Rassou. Thank you so much for your time, Patrice. There's so much to talk about today. So let's get straight into the company news. We did have British American Tobacco coming out with full year results today. What was quite interesting is that we did see a slight uptick in organic revenue with organic diluted earnings per share there up by 3.6%. Still dividend growth, and also saying that they will continue with share buybacks. But the share price got punished by 9%. Why?
Yeah, unfortunately, and good afternoon to you. British American Tobacco got smoked today, down 8.2%. Yeah, the update was disappointing. I think the issue is more an industry-wide issue whereby the industry volumes are down around 2%. And I think really what the warning was about is expected fiscal headwinds, mean higher excise taxes in a number of geographies. They're talking as far and wide as Bangladesh and Australia. So not only a very difficult environment whereby the traditional business is slowing, but at the same time, they're expecting to take more of a hit in terms of how various countries will look at increasing taxes. So not great for a company where many investors want to get a decent yield. So there's always that type of uncertainty as to how sustainable the dividend is from a company like that.
A very, very interesting journey that company is on, saying that they want to create a smokeless world by 2035. Let's get into the commodities. South 32 also coming out with numbers today. Interim results. We did see the diversified miner posting an uptick there in its financial metrics, where we really saw the benefit of diversification in the different cycles of its commodities. Markets welcomed that, with the share price picking up by 6%. Just unpack the flight that we saw in that counter.
Yeah, the star of the show really today on the JSE up over 6%, guiding that revenue from continued operations will be increasing 25%. I mean, that's an eye-popping number, and profits also, which were at around 1.2 cent the last half, going to rise to 8.5. So very good news. And I think there's a number of layers to the story. It's simplified its operation. It's sold one of its mines, Illawarra. It's got a much stronger balance sheet. It can fund its own growth, especially in copper. As you know, in terms of the whole green transition, copper is going to be quite important, and we've seen copper output up 16%. So that's very impressive. And also zinc. Zinc also doing quite well, and aluminium, where output is up 5%. So positive there. On the downside, they've got operations. If you think of Mozal aluminium, so the type of turmoil we've seen down in Mozambique, and also impacting a bit the civil unrest. So production guidance is unchanged, but I think in terms of the result, driving results up with EBITDA increasing over 40%. So very good numbers coming out of South 32.
Yeah, right. Well, still sticking to commodities, maybe a more concentrated miner there is Northern Platinum. They didn't come out with anything today, but they snuck in a trading statement yesterday at 5 p.m. just as the market closed. We did see revenue softening there as, of course, the price down cycle continues. Also posting elevated costs. They're expecting the bottom line to deflate by as much as 54.7%. Of course, stock is down about 4% today. No surprise there.
Yeah, the stock kept slipping today. I think it's like getting almost down 6% at some stage. So not very good guidance for the first half. As you said already, the problem when your top line goes down with the basket price dropping 3% and the costs increasing 8%, you really get squeezed. So the top line going down, costs going up, with mining inflation really biting there. So we did see good chrome sales. The concentrate sales were up over 7%. There's not a big debt burden. The debt to EBITDA is 1.26, which is low. They've got cash to fund themselves, but the market really a bit disappointed by the decline of 55%. I mean, Northern is meant to be a low cost producer, but they're also feeling the pain, like the whole platinum complex, of the lower basket prices.
Well, talking about pain, the building home improvement counters have been feeling a lot of pain for a number of years after the COVID boom that we saw. Italtal today released a voluntary interim trading statement saying that they expect the bottom line to rise by between 2 and 6.7%. We didn't really get color in that statement, but of course saying that we will have results early next month. Looking at that uptick in the bottom line of as much as 6.7%. Is it encouraging in any way, considering the tough environment that they've had to deal with?
Yeah, I think we've seen green shoots there in the whole sector. Obviously, the South African consumer has been under pressure. We're expecting a lot more in terms of economic growth and lower interest rates. Italtal itself has been, just this year has been down 14%. So I think these results will be seen positively, but I think more important is we are awaiting guidance as to what management expects in the next 6 months, basically the first 6 months of this calendar year.
All right. Well, I want to check in on Barloworld because we did have 2 cents announcements out today saying that Newco's 120 Rand per share offer will not be increased, so a no change announcement there. But we also got a separate announcement that Moody's is actually upgrading the company's credit ratings there with a stable outlook. Looking at where the share price is, though, it didn't really correlate with, I guess, the good news that we got there. Was down about 3% the last time I checked. Barloworld, I think at the moment is sitting at 107, and just looking at that 120 per share offer that they've been given, would it be too late to get into Barloworld at this point?
Yeah, look, I think the big move has happened. As you say rightly, there's this offer of 120 on the table. I think the concern is we're starting to get a bit of news that some of the shareholders, there's a London-based investor who says that they wouldn't accept anything below 130 Rand. So there's always a risk, given that they need 75% of shareholders to accept the offer of 120 Rand by the group from Saudi Arabia, that enough shareholders are disgruntled and reject the deal. That said, in overseas, they use proxy companies who basically do their own assessment of fair value, and then they recommend the assessment of fair value is between 105 and 119. So we don't quite know where it's going to go. And there's time value of money. So for investors, you have to bear that in mind also. There's a risk that the offer gets rejected.
All right. Well, Patrice, let us get to your stock pick for today. What are you hanging your hat on?
Yeah, my stock pick is one which we've backed in our funds for a while and done well for us. It's Data Tech. It's trading at around 50 Rand, a forward PE around the 12 times, which in the IT universe is very cheap. It's got a very global footprint in terms of businesses. It's also really streamlined its businesses compared to what it was before. But more importantly, I think in terms of software and IT services, it's got some niches which are growing really strongly, like networking, information security, and data centers as well. It's got some strong relationship for a number of years or decades with the likes of Cisco and a number of partners in terms of partners on the ground. So I think it's one where for South African investors who don't necessarily want to go and invest on the NASDAQ, given how expensive a lot of the Mag 7 are, I think this is one which will do well, especially given that its exposure is more emerging market, I would say, than the major markets.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today, Patrice. That was Patrice Rassou from Ashburton Investments.